Warren Buffett just sold everything he owned. Yes, every single investment. That's not just surprising, it's shocking. Did you know that Buffett is considered the most successful investor of all time, managing over $700 billion? So, why would someone like him ditch his entire portfolio? This move could signal a major shift in the market, and it might affect your investments too. If you've been wondering what the smartest investors are doing right now, this video is for you. I'll break down what Buffett's actions mean and how you can protect your money in uncertain times. Make sure to like and subscribe to stay ahead of the game. Now, let me show you why this is so urgent and what you need to know before getting started. Warren Buffett, widely regarded as the most successful investor of all time, has made a shocking move by selling all of his investments, clearing out his portfolio worth over $700 billion. This unexpected decision has sent ripples through the financial world and raised important questions about what it means for everyday investors like you. In this video, we'll explore the reasons behind Buffett's bold move, what it signals about the current state of the U.S. economy, and how you can respond to these changes. Understanding why one of the most trusted names in investing is shifting gears now is crucial, especially in a time of economic uncertainty. With inflation concerns, market volatility, and changing policies, knowing what actions large investors are taking can help you make smarter decisions about your own money. Whether you're a beginner, just starting out, or an intermediate investor looking to protect your assets, this information is vital to help you navigate these turbulent times. By the end of this video, you'll have a clearer picture of what Buffett's decision might mean for the markets and how you can adapt your strategies to safeguard your financial future. You'll understand the broader economic context and be better equipped to make informed choices in this unpredictable environment. But to make smart decisions, you first need to understand the economic landscape we're dealing with. Warren Buffett, the legendary investor often called the Oracle of Omaha, recently made a surprising move by selling all of his investments, totaling over $700 billion. This unprecedented decision has sent shockwaves through the financial world and raises important questions about what it means for everyday investors. To understand the potential impact, we need to look at the broader economic environment in which this decision occurred. Currently, inflation in the United States remains high, with the consumer price index rising by 3.2% over the past year, according to the Bureau of Labor Statistics. This persistent inflation erodes purchasing power and creates uncertainty. To combat inflation, the Federal Reserve has been increasing interest rates, with the benchmark rate now at 5.25%, its highest level in over a decade, according to the Fed Economic Database. Higher rates make borrowing more expensive, which can slow economic growth and impact stock markets. Housing markets are also feeling the squeeze, with mortgage rates climbing to around 7%, leading to a slowdown in home sales. Additionally, tax policies are shifting, with potential increases in capital gains taxes discussed in recent proposals, adding another layer of uncertainty for investors. These factors combine to create a volatile environment where traditional safe havens may no longer seem as secure. Market cycles are also showing signs of transition, with the S&P 500 experiencing increased volatility after a prolonged bull run. All these elements, rising inflation, higher interest rates, changing taxes, and shifting market cycles, highlight a landscape of uncertainty and risk. With that context in mind, let's break down the strategy you can actually apply. Warren Buffett, known as one of the most successful investors of all time, recently made a surprising move. He sold all of his investments. This means he liquidated his entire portfolio, which was worth hundreds of billions of dollars. But what does this really mean for you? Let's break it down. When Buffett sells all his investments, he's essentially converting his stocks, bonds, and other assets into cash. This cash can then be kept safe, used to buy new assets later, or simply held until he sees better opportunities. The key idea here is that sometimes investors choose to hold on to cash instead of risking it in the stock market, especially when they expect uncertain times ahead. In investing, there are a few important terms to understand. One is liquidity, which simply means how easily an asset can be turned into cash. Cash is the most liquid asset. Another is market volatility, which refers to how much prices go up and down. When markets are volatile or uncertain, some investors prefer to stay in cash or safer assets. Lastly, risk management involves protecting your money from potential losses, especially during unstable economic periods. By selling everything, Buffett might be trying to reduce risk and prepare for an uncertain economic environment marked by high inflation, rising interest rates, and market fluctuations. For everyday investors, this move can signal that it's wise to think about your own risk levels and consider holding some cash for flexibility. Now, let's look at a real-world example to see exactly how this plays out in practice. Warren Buffett just sold all his investments, leaving many wondering what that means for everyday investors. Let's imagine a realistic scenario based on recent U.S. market conditions. Suppose you decide to sell your $300,000 home and take the proceeds to pay down debt or hold as cash. Using a mortgage calculator, you find that a typical 30-year fixed mortgage at 7% interest on a $300,000 loan results in monthly payments of around $2,000. Over the life of the loan, you'd pay roughly $430,000 in interest alone, making the home significantly more expensive than the initial price. Now, imagine instead you keep the home and invest the $300,000 in a diversified portfolio. Historically, the S&P 500 averages about 8% annual return. If you leave your money invested for 20 years, that same amount could grow to approximately $1.7 million, factoring in compounding interest, taxes, and inflation. Alternatively, if you choose to hold cash, you protect your capital but miss out on potential growth. This comparison highlights the importance of understanding risk and return. Buffett's move to liquidate all assets reflects a cautious approach in uncertain times, emphasizing the need for individual investors to evaluate their risk tolerance and liquidity needs carefully. Remember, investments can fluctuate and market timing is challenging. This looks great, but only if you avoid the common traps that ruin deals like this. Warren Buffett just sold everything, signaling a major shift in the market. While his move might seem alarming, it's a reminder for all investors to avoid common pitfalls that can derail success. First, one of the biggest mistakes is poor risk management. Many investors hold on to assets during downturns, hoping for quick recoveries, but this can lead to bigger losses. Never underestimate the importance of diversification and knowing your risk tolerance. Second, skipping due diligence is a costly error. Just like buying a used car without checking its history, investing without understanding the assets can backfire. Take the time to research and understand what you're investing in, especially during volatile times. Third, overpaying for investments is a trap. It's tempting to chase hot stocks or real estate, but paying too much can erode your potential returns. Remember, patience and valuing your investments wisely are key to long-term growth. Fourth, neglecting to maintain liquidity can leave you vulnerable. When Warren Buffett sold all his assets, it was partly to preserve cash for opportunities or safety. Always have enough liquid assets to weather market fluctuations or unexpected expenses. Finally, ignoring your financial plan and emotional responses can lead to impulsive decisions. During volatile periods, stay disciplined, stick to your strategy, and avoid panic selling or buying based on fear. To avoid those mistakes, here are the best tools and resources available right now. Warren Buffett, the legendary investor known for his long-term success, has just made a shocking move, selling all of his investments and turning his portfolio into cash. This signals a period of high uncertainty in the markets, driven by rising inflation, increasing interest rates, and economic transitions. But what does this mean for you? More importantly, what can you do today to protect and grow your wealth? First, consider leveraging financial tools that help you make informed decisions. Websites like Investopedia, www.investopedia.com, are invaluable for understanding investment strategies and market terms. They offer free articles and tutorials that can improve your financial literacy. Platforms like Mint, www.mint.com, help you track your expenses and manage your budget, giving you better control over your cash flow. If you're interested in investing or diversifying, you might explore Robinhood, www.robinhood.com, a user-friendly app that allows you to start investing with small amounts and offers educational resources for beginners. For real estate insights and market trends, Redfin, www.redfin.com, provides data to help you evaluate property investments and understand housing market dynamics. Using these tools, you can assess your financial position, understand market risks, and build a strategy tailored to your goals. Remember, maintaining liquidity and diversification are key to weathering market volatility. Avoid impulsive decisions driven by fear or hype, and focus on disciplined, informed investing. Now that you got the tools, let's talk about the first thing you could do today to get started. Set up a simple budget, review your expenses, and identify areas where you can save or invest more wisely. Taking small, informed steps now will set you on the path toward financial resilience, no matter what the markets do next. Warren Buffett, the legendary investor, just sold everything. Yes, he liquidated his entire portfolio, signaling a moment of uncertainty in the markets. But what does that mean for you? It's a powerful reminder that even the most experienced investors stay cautious during times of volatility. And it's an opportunity for you to take a simple, realistic first step today to improve your financial future. Start by checking your credit report. It's quick, free, and gives you a clear picture of your financial health. Or, if you prefer, download a finance app to track your expenses or simulate an investment to see how small changes can grow over time. Taking one small action today unlocks your path to better control over your money and builds momentum toward your goals. Remember, every big success begins with that initial step. By staying consistent and making informed choices now, you create a foundation that can weather any storm. Imagine where you could be in a year or 5. More confident, more prepared, and closer to your dreams. Taking that first step is how every long-term success story begins. Let's look at what happens when you stay disciplined, keep learning, and stay committed to your financial journey. The future belongs to those who start today. Imagine 5, 10, or even 30 years from now. Warren Buffett, once the world's most renowned investor, decided to sell everything and hold cash, signaling a time of uncertainty. But what does that mean for you? It's a reminder that long-term success isn't about chasing quick wins, but about consistent, disciplined actions over time. Picture yourself starting today. Maybe by 2035, with steady saving and smart investing, you could own 5 cash-flowing properties, generating reliable income for years to come. Or perhaps you've built a diversified portfolio that steadily grows, even during market ups and downs. The power lies in patience and persistence. Small, regular steps that compound into real wealth. Remember, you don't need to become an expert overnight. Simple habits like tracking your expenses, learning about investments, and setting clear goals lay the foundation for a secure future. Warren Buffett's move reminds us that during times of uncertainty, maintaining focus on your long-term vision is key. It's about making smart decisions today that pay off tomorrow. And now that you see what's possible, here's how we wrap this up and take action. Start with one small step. Review your finances, set a goal, or learn something new about investing. Because when you commit to consistent progress, you're building a future where your financial goals are within reach. The journey begins now. Warren Buffett just sold everything, transforming his massive portfolio into cash, signaling a cautious approach amidst economic uncertainty. This bold move reminds us that sometimes stepping back and prioritizing liquidity can be the smartest move in volatile times. Remember, managing risk, staying disciplined, and focusing on long-term goals are key to financial success, especially when markets are unpredictable. I want to thank you for watching and for your commitment to improving your financial future. Every small step you take today, whether it's saving more, investing smarter, or learning about money, brings you closer to your goals. So what's your first financial goal for this year? Drop it in the comments. If you found this helpful, make sure to like and subscribe for more insights. And if you're interested in how to build wealth during uncertain times, check out our related video on smart investing strategies. Remember, the journey to financial freedom starts with a single step, and with discipline and patience, you can achieve lasting success. Stay focused, stay confident, and I'll see you in the next video.